It's my opinion that over the next 6 months, the stock market has more downside potential than upside potential. I'm in about 45% cash, so I'm asking myself, where should I put that money? Should I just leave it in cash and not make anything on it? Should I get involved in swing trading? That takes some time that I don't really have, but we do have it on a training course on our Discord. Or should I look for some S&P stocks that pay good dividends? So I've been spending some hours of my evenings building a portfolio. I've chosen 36 stocks in the S&P that pay dividends, and now I've whittled it down to 10 stocks that I think can give me the best return. Let's look at it, let's share our thoughts, and see if this is a good move.
Best of Us Investors presents Carrie Griegmeyer.
Okay, we've gone through this with the growth portfolio. Now I want to share with you the income portfolio that I'm building. And what I did was I created a list of 36 stocks that are in the S&P 500 that pay a reasonable dividend. And it goes all the way from Apple at 0.65% to Haynes, which is at here at 9.19. And what I wanted to do was familiarize you with these stocks and what kind of dividend they pay and how you might want to build a portfolio to do such. And so I went in and I had a purchase date of 12/1, and I'm tracking it so that we can get a comfort zone of, okay, I see the dividend and what it's going to pay me. Now, how am I going to deal with the price movement, and am I okay with that? And particularly in what is a down market, or when do I want to buy into it? So what I've got here is the 36 stocks, and I've sorted them by alphabetically, going from 3M to Von Vorano Realty Trust, something I'm not familiar with. And in the first column, I have the yield, and that is the dividend that they will pay based on their current price. And this is the current price. This is the price that I bought it at. So the dividend that is being reflected is the current or the dividend based on the price that I purchased it. And what it's showing you here is that with 3M paying a 4.78% dividend and an investment of $2,388, I will get 19 shares, and that will yield me an annual dividend income, probably paid quarterly, of $14.19. This, again, is the purchase price. This is the current value based upon the current price. So my purchase price, the current price, is higher than the purchase price, so my value is higher than my investment. And in fact, it is up 0.15%. Then I wanted to show you what the 10-year return on investment is to give you some just relativeness of what does this stock do over a 10-year period, what the PE ratio is, price to earnings, and then I said, how many shares would I have to buy in order to generate $500 a year? Okay? So I went through each stock to do that, all right? And you can see, even since the purchase date of 12/1/22, we have some stocks that have taken quite a hit. Here is Coterra Energy, and it's down 12.1% already, and it's only 15 days into the month. But this is a learning lesson. This is not anything anybody did. It's just a learning lesson. Here I see another one. In fact, this is Procter & Gamble. No, it's Valero Energy. So again, it's another energy stock and that is down as a result of the movement in the energy market. So this whole portfolio, if you bought all 36 of them, you would get an average rate of return of average dividend of 3.6%. So then I said, okay, let's be more selective. And I came up now with 10 stocks that I'm putting the same $86,000 in at $8,600, and I've increased my rate of return to 5.16%. Up here, in the same period of time, my 83,000 turned, or 86,000 turned into 83.9, and down here it turned into 84.2, down 2%, down 2.3%. But my dividend has increased to a average of 5.16. Okay, so that will give me $4,436. And so this gives me a comfort zone as to how a dividend portfolio might be either incorporated to an investment portfolio or be your total portfolio. In essence, I'm saying if in fact you had $86,000 and $4,436 would make a difference in your life and make your life easier. And if you look at the stocks and say, I believe there is some ultimate growth potential there as we get through this recession, and that my 86,000 might turn into 96,000, that gives us a different look at what investment's all about. And then you do what I do. You look at it and say, okay, what about the stocks? How do I feel about them? Well, Alta is a cigarette company. Devon Energy is exploration. You know what 3M is, Scotch tape and sticky notes. Intel, I put Intel in there because Intel is building a semiconductor plant in Arizona. AT&T and Verizon also both in the communication business. Broadcom in the software. Clorox in the home products. Again, another energy. And I leaned towards energy because I think energy is going to continue to be important, particularly on the short term as we get further into winter and we have situations in Europe relative to energy. And then Morgan Stanley, my one entry in this 10 portfolio in the banking industry. So that's how I've done that. Okay, now I want to address how do I take that portfolio, those 10 stocks, and maximize my return on the cash that I've got sitting on the side. So let's look specifically at them. Let's come to understand what declaration date is, ex-dividend date is, date of record, and then when you're going to get paid, and how you can then anticipate when you'll get paid in the future, because you don't want to be buying a stock and then selling it just before its date of record and you miss the dividend. So let's understand how that works. Okay, I recorded this on December the 15th, so what I've done, so what I'm showing you here is the ex-dividend date. This is the date if you own the stock on 12/21 of Altera, you will get the dividend. So today is the 15th. If I buy it today, that means I'll get that dividend. On the other hand, Devon Energy is ex-dividend on 12/9, so I will miss that one. I need to own it 3 months later in order to get Devon. So the other stocks that I would most likely buy and qualify for would be Verizon, Broadcom, and Clorox. So those are all in the near future. I've also indicated that AT&T was ex-dividend on October the 6th. So although they haven't declared the dividend, that will probably become available for owners of record on January the 6th, and Morgan Stanley on January the 28th. So those are the ex-dividend dates. Where did I get those? I got them from my Seeking Alpha page. Just went to Seeking Alpha and typed MO up here, which brought up Altera. I'm on the dividend page, and I page down, and it tells me what the dividend amount is, the ex-dividend date, again, that's the date of ownership, the payment date, it will pay it on January the 10th, the record date, that is 12/22, that's the date they're going to look and see if I in fact own it. The declared date, they declared the dividend and named it at 94 cents a share on 12/07, and it's paid quarterly. So that's how this is all done. Okay, let's review what we've done. We've got some cash sitting on the side. We've done that because we think the market's going to be down, particularly in my case. I believe tech stocks are going to be down, so I have a sizable sum of money sitting on the sideline. I recognize that once we get through the inflation and the interest rate issues, the market's probably going to come roaring back. But where do I put my money, my cash in the interim? I've decided I want to find some dividend stocks. I've identified 10. I've recognized when they become ex-dividend and when the day of record is and when the dividend is going to be paid. So I want to put my money, my cash there, collect the dividends. These are stocks that I think will actually grow as well. So when the market does turn around and money starts flowing to good stocks, I will also, in addition to the dividend, I'll make money on the increase in price. At that point, I'll make a decision. Do I want to sell those dividend stocks and take that portion of my portfolio and invested in tech where I think the growth might be larger? That's what I've done. I hope this is helpful to you. I hope it clears up some issues that you may be not aware of. I hope you're also seeing the value of tools such as Seeking Alpha. And right now they have a New Year's sale on where you can get it for 83% discount if you sign up for a year. That link is in the Discord, and I'll talk to you again more about this and other investment opportunities tomorrow and beyond.